Welcome to how to make money basically. It doesn't matter what's happening. This is about how to profit from current events, which is two things are going to happen now, which is the US election and the Federal Reserve is going to be cutting rates. Okay. Um, just a bit of warning slash note, this video is for educational and entertainment purposes only, not a financial advisor. So consult your financial advisor for your specific situation. You make money, you lose money. I'm not responsible, right? Hopefully, you make tons of money using this, all right? And I've done a lot of research, and that's why I'm just giving you things that I feel will help you in making a lot of money. So, number one thing that you need to keep in mind is be a trader. Like take calculated risk. Don't be a speculator, don't be a gambler, like, oh, this XYZ stock is going to go, to the moon, and then you're going to, be a billionaire and retire. Don't do that. I mean, what the things that I'm telling you is how you can make money consistently over a period of time. By the way, you should watch my video on trading basics if you want to get more information on how to make money consistently. So watch that, and that will also help you understand many of these concepts. So if you're not already watched it, go ahead and watch it now. Um, or in there is another way, which is people lose money is being biased one way or the other. Some people prefer a particular uh, party, and they bet one way or the other. Don't do that. Just take calculated risk, right? So the goal should be to make money. See, when you're in the stock market, goal should be to make money and not to prove a point. I mean, you're already smart. That's why you're watching this video. Anyway, so the two events that are going to happen is the US election, which is, as you all know, it's between Democrats, Republicans, Harris and Trump, which is going to be on November 5th. It's the first Tuesday every year. So every, whatever the election cycle is, 4 years. And the Federal Reserve said it themselves. They're gonna at the Jackson Hole meeting that they will be reducing, or there's a policy shift. That's code word that they're gonna be lowering the rates basically. And they have a 2-day meeting, so the decision will come out on the 18th. Okay, so these two events are going to happen. So now, what I'd like to also tell you is, the high risk, high reward is actually BS. It's about high probability, which is low risk and high rewards. That's the type of trades I like to trade, and that's the type of trades you would also, benefit from by taking. The classic example of this is Warren Buffett. He takes high probability trades. So don't think in terms of high risk, high rewards. Usually it doesn't work. Okay. When, people, so some college dropouts, start an internet company and they become millionaires, billionaires. I mean, that's very few. Most of the people that drop out of a college are not going to have a good life. But anyway, so what I'm saying is trade in terms of the probabilities. Okay. Don't just go for one example, like, oh, that person made billions of dollars in Bitcoin, so I'm going to do the same thing. Yeah, that person could have made money, but it's not that likely. Okay. But what is likely is if you go for high probability trades, you're going to make tons of money. So we look at two things, which is S&P 500. Is the market going to go up, down, sideways? What's the most probable, what is the most probable outcome? And I'm going to show you in a minute that all these outcomes are actually probable. The stock market, the election year, and when the Federal Reserve lowers rate, it has done everything up, down, sideways. Even with the election, also it has done. So there is no guarantee whether it's going to do one thing or the other. But the TLT is actually the iShares 20 years plus Treasury bond ETF. That always goes up. I mean, I'm going to show you the data. All the data doesn't go too far. The number of times the Federal Reserve has cut rates in the past. I'm taking the data from 2000 because before that TLT didn't even exist actually. And also, Federal Reserve didn't actually have as much effect on the stock market before that. If you look at the data, you'll see that. All right. So just to recap, these two things are going to happen, election and the Federal Reserve, and we are focused on what would be the impact of that on S&P 500 and TLT. Okay. So we're going to look at that. And also, I want you to keep in mind, we're actually not going to trade TLT, but we're going to trade TMF, which is 3 times TLT. So if TLT goes up by 1%, TMF will go by 3%, go up. Okay. TMV is the inverse of that, which is if TLT goes up by 1%, TMV will go down by 3%. Okay. And in case you are in a rush, you don't want to watch my whole video, I'm just giving you the secret. So what I want you to do, I mean, the action to take would be to buy UPRO, which is 3 times S&P 500. But don't buy it right now. Buy it when it goes down 50%. And I'll tell you the reason why later on. But if you're in a rush, just follow this. And how you do that is by selling puts. I have the video on trading basics that will give you all the details about this. Don't buy TQQ. As you know, a lot of people talk about AI mania. If you think about dot-com mania, NASDAQ dropped close to 80%. And if that time you had TQQ, which it didn't exist, but you would be down like 99% and you would still not break even by now. Okay. So if the market is in AI mania, quite possible. And also, as I said, don't think in terms of predicting what the market is going to do. Okay. Think in terms of how can I make money. Okay. So don't that is for fortune tellers and people that come on CNBC and all that, what the market will do. I never care what the market will do because I want to make money whether the market goes up, down, sideways. So again, I'm sorry, plugging my video again. So if you subscribe and if you look at my channel, you'll see the Trading Basics video. Uh, Go ahead and do that. I could include a link in the description, but I'm not going to do that. Hey, you guys need to do some work too. You're getting all this information for free. I mean, I enjoy doing these videos. I mean, I want all of you to make money. So I'm doing it, and you need to spend a little bit of efforts too. And any of these things you don't understand, feel free to Google it or, let me know, and I'll be more than happy to help you. Okay, and for those, the cheat sheet here, again, sell puts on TMF. See, right now, TMF is around 57, something like that. So you want to buy, the sell puts. And I'll explain that in a little bit later, okay? In short TMV. So this is the cheat sheet. If you are in a rush, do these two things. Okay. So buy UPRO, but you're selling puts. So UPRO is the high was like 84, 85. So just sell puts at 42, 41, 40, 39, just all the way under. And so you're buying it over there, not right now where it is. Selling puts on TMF. TMF is now 57, 58, something like that. So you're selling puts 50, 49, 48, all the way. About shorting TMV. So TMV is close to 30 something. So you short it at 30. And then, shorting is when it is, so 30. So you'll be buying it down I usually buy it back when it has gone down 5%. So if you're sold it at 30, so 5% of 30 is 1.5, which is when it hits 28.50, that's where I'll be buying it back. So you can sell it at 30, 33, 36, so you're selling it every 10% above and taking profit at 5%. So that is the cheat sheet, but now I'm going to give you the details as to how did I come up with this, right? So let's first take a look at election years, what happens. And, try not to be a Democrat or a Republican when it comes to making money, be a trader, as I said. All right. So as you'll see, the blue lines are actually Democrats winning the election, and the reds are Republicans. So if you'll notice, except for this the Bush election, because we were in the terrible dot-com bubble busting. So I'm not going to blame Bush. I mean, you should never blame a president for or give credit. Most of the time, yeah, it is the business cycles, right? So no matter who the president is, it depends upon the business cycle. Right now, we are in an awesome time, which is the AI era. So everything is going up. Okay. The bubble, the 2000 .com bubble, or the housing market, or now the AI bubble, it's typically presidents have very little to do that. So don't be biased politically when it comes to making money. So this is what you will see, but you will notice that on an average, you see this orange line is actually average. Okay. Orange line is the average one. So average after a year. So this is, before and after the election. Okay. After about a year, no matter who the president is, the stock market is usually up close to like 10%. Okay, so this is the average. But there are times when it could go down, big time. That's why I'm saying sell puts 50% below where UPRO is, or where the UPRO's high was, which is 85. Sell it close to 42, 41, things like that. Okay. Here's another picture of this US election since 1984. And again, this is taking out the president, so this way you're not biased against Republicans or Democrats. And you will also see that the purple line, you'll see that, the market has on average gone up 10%. So even if you did something, your trade wasn't that good, if you are an ETF, which is SPY, you should be able to be up 10%. So longer term plan, if you are, if you have kids, they are in their 20s, just put, let's say, $100 every month in SPY. Okay, don't put any in any of the leverage funds or anything like that. If you have kids, they're in their 20s, or anybody who's young, just put $100, $200, $1,000, whatever you can afford per month into SPY. By the time the kid reaches 60, they will easily have tons of money, more than $10 million. I've done the calculations on that. Okay, more than 10 million easily, just with SPY. Anyway, so that is for the election. Like, no matter what happens to the election, that's what the data shows, you will be able to make money. Okay. But during the year, it can fluctuate quite a bit, go up and down, right? Now we come to the second event, which is the Federal Reserve. If you look at the Federal Reserve, this chart, if you if you focus in on that, you'll notice that the Federal Reserve has, by the way, these gray lines, let me make this bigger a little bit. The gray lines are actually the recession. Okay. So you'll notice when Federal Reserve was cutting rate. So this time actually there are two events that are happening, which is the election and the Federal Reserve cutting rate. So it's a double whammy. Right? So the market went down. So recession. Here also recession. But here there was no recession. Okay. Here also there was a recession. Here also. Here, if you look at this part right here, there wasn't. I hope you are seeing my cursor over here. So we're talking about the 80s, mid 80s, sort of early 80s. So as you can see here also, there is no recession. So it's a hit or miss, whether what the market will do as far as S&P 500. We're talking about S&P 500, okay? As far as S&P 500 is concerned. Now let's look at just like we looked at the election. So this is also what we're doing is we're looking at, the election, the Fed rate cut. So before that, the market could be all over the place. And after that it is also all over the place. But the good news is, you see, this is the composite, the black one, the black line is the composite. Uh, that is, I don't know exactly if you are seeing where my this is. So let me see if I can annotate it, right? Okay. Okay. All right. So as you can see, this black one, this is the one. So over, after a year or so, the stock market will be up. Okay. So that's what it shows. Now let's move on to the next graph. So this is, see, TLT is not supposed, you're not supposed to hold it longer term, because I'm just showing you TLT existed only after July 30th, 2002. That's, at least I have the data from that point. If you held it from 2002, July 2002 till today, you would have made 12% on it, 12%. So if you had put $100, your $100 would have been 112.79, $113, let's say that. And if you put the same $100 in S&P 500, your $100 would have appreciated by 500, which is $100 would have been $600. So TLT is not a long-term investment. This is only during this period, which is when the interest rates are, the Federal Reserve is going to cut interest rates. Okay. Sometimes you need to think about what the event is happening and how you can take advantage of that. Right. So if you look at these, so as I mentioned, we're going to focus only on time after 2000, because I've done the analysis, and before that, it's all over the place. But after 2000, it seems to be, oh, two things. So S&P 500 is all over the place after, when it comes to Federal Reserve cutting rates. And if there is no recession, then S&P 500 goes up when Fed is cutting rates. But if Federal Reserve is cutting rates very aggressively, meaning economy is going down big time, then the stock market is going to drop. But in all of these cases, TLT always has gone up. I mean, we have data points for only three, because as I mentioned, TLT did not exist before 2002. So these are the three that we're going to be looking at. So this one right here, 2000, 2007, and 2019. These are the three time periods we're going to be looking at. Hopefully, you're able to see what I just focused on. Okay, I'm deleting these because they stay; they don't go away. So this is what happens when the Federal Reserve is cutting rates. As I mentioned, it is all over the place, but average is, the stock market does go up. That is as far as stock market is concerned. And remember, we're talking about S&P 500 and TLT. By the way, this video, if it gets a little confusing, that's all right. You just watch it again and again. You'll get the hang of it. You guys are smart, so you'll be able to figure it out. All right. So as I mentioned that, so the first rate cut. So we're coming to the first rate cut, which was in 2001. And I'm just giving you an idea as to how it started happening. The Fed started cutting rates very aggressively, 50 basis point, by the way, means half a percentage point. So the rate went down to 6%. And from 6%, it went down to 5.5%. So I believe it was at 6.5%. So then they cut it down, then it goes to 6%. From 6 to 5.5%, and so on and so forth. See, this was an aggressive rate cutting cycle. That's why the market went down. Or you could say that the market was already weak. That's why the Fed had to keep pumping, keep injecting more stimulus into the economy. And even after that, it wasn't good. So, so by the way, this should have been, yeah. So yeah, this should have been 1.5, and then it went down to 1.1, 1.75 to 1%. Okay. So let's see what happened to TLT when the Fed was cutting rate. So as you can see, this TLT, this is TLT. This thing is TLT, right? This is TLT, and this is S&P 500. Okay. So as you can see, TLT went up by 15%. And S&P 500 went up by like 8.64, close to 9%. Okay. So now let's see if that's what happened to TLT, what happened to TMF, because as I mentioned, we're not interested in making money on TLT, but we're interested in making money on TMF. As you can see, by the way, I want to caution, as I mentioned, this is from July 2002. Because TLT did not exist before that. I could calculate it by seeing 30-year Treasury bond and calculating it that way. To keep things simple, I've just left it at that. So even though the rate cutting started happening from 2001, January 2001, since the data is available only after 2000 and July 2002 for TLT, that's why this chart only has that. Okay, and TMF and TMV did not exist in 2002, so I just created those. It's a long discussion if you want to know how to do those things, but just to keep it simple, since TMF is if TLT goes up 1%, TMF goes up by 3%. Okay. TMV will go down by 3% and vice versa. So I've used that, and these calculations are done daily, right? On a daily basis. So that's what I've done to calculate TMF and TMV. So TMF, the orange line is TMF. Okay, that's what we're focused on. Okay, as you can see, when the rate started cutting, it has gone up. Okay, and when the stock is going up, we want to sell puts. Okay, and again, I keep repeating, watch my trading basics video. So basically, when you're selling puts, you want the market to go up. So when you go sell, let's say the stock is at 60 and you're selling the puts for 50, and the stock goes from 60 to 65. So guess what? The put that you had sold at 50, you kept the premium on that, because whenever you're selling a put, you're getting a premium. Somebody's giving you a premium. Let's say you got $100 in premium, you keep that money. Okay. But if the stock, when it is at 60 and it drops down to, let's say, 48, you're obligated now to buy the stock at 50 because you sold the put at 50. So, but now the stock is at 48, but your cost will be 50 because you promised that you will be buying it at 50. So even if the stock goes to zero, since you sold the put at 50, you'll be buying it at 50. Okay. So selling puts can be a little challenging. Again, I keep referring you to my trading basics video. Watch that, you will get a better picture. So as you can see, TMF went up. So all the puts that you were selling, you made money on those. Now the second rate cutting happened in 2007. So the rates went down from five and a quarter, 5.25 over here, as you can see. Okay. So 5.25. Yeah, what's going on here? Sorry, guys. Okay, now it should be good. Oh, okay. Vanishing pen. Vanishing pen is interesting. Highlighter. Just want to draw. Okay, something is a little messed up here, but we'll figure it out. Let's see what's going on with the colors here. What is the smart pen there? Okay, yeah, figure that. So anyway, the rates were at 5.25. In 2007, they went down to 0% here. Okay. Let me see if I can just, okay, get rid of that. Good. All right, so here, we'll just keep keeping it simple from here to here. Okay, so that is a big move in terms of Federal Reserve cutting rates. Okay, and this also shows how it happened. As you can see, the first rate cut was a big one, 50 basis point, which is 0.5%. So you know that something was not right with the economy. That's why the Fed kind of pumped it, and the other rate cuts were also big. Then the last rate cuts were even bigger. So you know that the economy was in trouble. That's why the stock market went down like 50%. Okay. Now what happened? So let's see what happened during this period to TLT. TLT went up by 40%. Stock market here you can see went down by 42%. Let's see what happened to TMF. TMF doubled. Okay. But as you can see, as it was going through this process, uh, let's give it another shot. As it was going through this process, can you, technology. Right. I don't know if there is something wrong with the colors or something, or yeah. Okay, that's fine. So, but hopefully you can see my pen over here, right? Hopefully you can see that. All right, so you can see this is TMF initially went down a little, right? So it went down by 10% or so. Then it went up, then it went down, up, down, up, down, up, down before. And this, the only reason it shot up this much is because, as I showed you over here, the interest rates cuts were very aggressive towards the end, right? That's why it went up. See, that's why I'm telling you not to buy TMF right away. You should be selling puts because you know that TMF is going to go up. And even if it doesn't go up, it goes down a little bit, you will be able to break even. Okay. So, right. So that was the second rate cut. So right now, even for the first case, TLT went up, which means TMF went up. So you would have made money. Second case, the same thing. Let's look at the third case. Unfortunately, we have only 3 instances of Federal Reserve cutting rates. And let's see what happened in the third case. Uh, okay. So third case, look at this. It's this time it wasn't a big jump. It was only from 2.25 to 0%. And unfortunately, the COVID also happened that time. So we can say the economy tanked because of that. But even though all those things were happening, you see, TLT went up. TLT went up by 23%. Guess what? Then TMF would have gone up, and you can see that it has gone up, right? So in all the three scenarios, TMF did go up, meaning selling puts on TMF would have been profitable in all these cases, right? Um, so let me recap and then I'll tell you something else interesting also. So quick recap, this is the action to take, okay? Buy UPRO only after it you're selling puts. So UPRO is at 85, you're selling puts 42, 41, 40, keep selling puts below that, okay? How do you sell the puts? Watch my Trading Basics video. But here also I will show you, if you see UPRO, UPRO right now, the price is, right now it is 82 something, right? So you would be selling, and you have to pick a expiration. So let's say I'm just picking January 25. And so, yeah. So you could get premium of 87 cents, which is you multiply it by 100, which is you'll get $87 if you sold one put. Selling one put means you're guaranteeing that you will buy when UPRO reaches $42. Okay. But you're collecting the premium, $87 for that. So you're selling UPRO 42, 41, 40, all those puts you're selling. So, and then let's go back to TMF. So UPRO, you're selling that. Don't worry about TQQ. It's not a good thing right now. Okay. Now the next thing, as I said, is sell puts on TMF 50 and below. Okay. So let me show you what I mean by that. So we go over here. So again, I'm using Interactive Brokers. Whatever your trading platform is, your screen would look different based on that. So right now, September 20th is the expiration date. You could go to a higher expiration also. You are getting premium of 22 cents if you sold the put 50 put right now. Actually, you're going to get a little more. You get minimum you're going to make is $24 in this trade. Again, you're guaranteeing you will be buying it when it reaches 50, which means that you should have money to be able to support that trade. Okay. All right. So let's get back to our. Sorry, somebody was calling me. But anyway, now the third trade that I mentioned was shorting TMV. Okay, I'm going to tell you that. If you look at the longer term chart of TMV, what is it doing? It is going down. So, I mean, this is all adjusted price based on, so because there've been lots of splits and things, but as you can see, it has lost more than 90%. Okay. So no matter what is happening, TMV is always losing money. Okay, but sometimes it could pop. It could pop to 5 times where it is. So you have to be careful. So when you're shorting TMV, so TMV is right now at close to 30. So you're shorting it at 30. 33, 36, like that. Okay, don't put all your money on that because it could go up 5 times if the market goes crazy. So don't do that. And again, the key to making money is not to make gamble all your money on one trade. Try to put a little bit of money on one trade, some more money on another trade. At any given point of time, I have more than 100 trades going on, so many different things. Okay, because you want to make money from anywhere and everywhere possible. Okay. And as I showed you over here, also, any of these charts, you can go back and see TMV is the one in gray. It has been going down. See, in this case, it has lost 50%. In this case, it has lost close to 60%. And here it has lost close to 60% as well. Okay, even though we don't have it right from 2001, but you get the point. But whenever I short it, I always make like, take 5% off. That's it. Um, and don't be too greedy. Okay. All right. So a word of caution about the leverage ETF. What do I mean by leverage ETF? The leverage ETFs are UPRO and SPXU. I mean, there are so many others, but I picked UPRO and SPXU. UPRO is 3 times SPY, okay? And SPXU is inverse of 3 times SPY, okay? So these leverage ETFs, as you can see, so from close to 80, it went down to 25. So they move quite a bit if the market moves big. So this is all the way from 2010. As you can see, the drawdowns are big. Okay, so you got to be careful. You want to only buy when I'm telling you to buy. There are times, see, you can make money in anything and everything, but you can actually, people have made billions of dollars recycling garbage. So you can make money in anything, but you have to understand what it is and then go for it, right? Don't just blindly copy trades from anyone. Whatever I'm telling you, also try to see how you can look at all my charts and everything and see how you can recreate that, because that's how you will learn things as well. So, word of caution about ETFs, sometimes, do you have the stomach to, sit with all these losses and wait a few years before you can break even? Okay. So be careful. Do these only when, uh, again, I'm sorry, plugging that video again, Trading Basics video that will show you how to trade UPRO. Okay. That you can make money all the time. Look at TMF. TMF also over the long run has lost more than 90%. So, but there is a time when you can make money on TMF, and that's the time that I showed you when Federal Reserve is cutting rates. Other times, forget TMF. Or maybe short it, but don't short it now because TMF is going to go up. Okay. TMV, as I mentioned earlier, same thing. Now there are other ETFs also. TQQ, look at TQQ. It went from close to like $90 to down to like $20 during the COVID time. Okay. And then it has come back now. So these move quite a bit. Similarly, you have UDOW, which is 3 times Dow. Now I'm not moving here, but that's okay. So you get the idea, right? So let me, I know the video has gone a little longer, so let me quickly tell you summarize this. 2 things are going to happen. US election, Federal Reserve cutting rates, but we don't know how much they're going to cut by. It is going to happen. Okay. Now, so this is a guarantee. Like this is a guarantee that the election is going to happen on this day. Take off the annotate. Okay. Something keeps happening, messing up. All right, now see, election is going to happen on this day, guaranteed, but we don't know who's going to win. In how the market reacts to that, we don't know, and we actually don't care. As I said, the focus should be on making money, not about your bias, whether this is going to happen, that's going to happen. That's how people lose money because they have a bias. My thing is, I don't care. Stock market goes up, down, whatever. I can make money either way. And the second thing is Federal Reserve cutting rates, but we don't know by how much, quarter percentage points or 50, half a percentage points. And 2 things we focused on in this video was S&P 500 and TLT. And as I said, I'm just going to give you a final summary. Keep selling UPRO puts 50% below where it is. So 42, 41, 40, sell that. Sell TMF puts 50 and below, which is 50, 49, 48, so on and so forth, depending upon how much money you have. If you don't have too much money, then you sell it at 50, 45, 40. So you want to make sure that you have enough money to cover if the market were to go down all the way to, let's say, 1 or 2. Yeah. So it will not do that, but it's good to have that. Okay. Short TMF short from 30, 33, 36, so this way you're giving it room. And every time you short it, you want to buy it back at 5% below that. All right. Hope you got something out of this video, and hope you make tons of money using this video. Okay. All right. Awesome. All the best, and see you in the next video. Bye.